Good morning, this is Graham Bibby on the 9th of October 2015, coming to you with my weekly market update. This time I'm focusing on the market leader of the US. I say the market leader because that's the market all other markets at the moment seem to follow. By that I mean if the market has a strong up day, then when Asia opens and Europe opens, they seem to follow and have an up day. If it has a down day, the reverse happens. So what's been happening recently? Well, the last week is good and bad in some respects, because the previous week we had a huge sell-off in the markets, resulting in our exiting the markets for protection. And then hey ho, when we got to the bottom of where we were in August, the market reversed and has gone straight up in basically a straight line. So here in front of me now, the arrow is pointing here to the left. We have the Standard & Poor's 500. It's the top 500 stocks in the US. So this was the huge sell-off in August, which we managed to avoid, most of it anyway, because we just got out when this reversed. And then we got in when my undervalued superior earnings stock started to break out to the upside. And it looked like that was the right thing to do, because this index broke above this previous top level here, this downtrend. And when that normally happens, that's the sign that we're getting a breakout and a move in the direction of the breakout. Technical analysis and chart following and even psychology is not a perfect science. And then what we found is people profit took and the market basically crumbled back down to get to the support level of around the 1850 to 1875 level, and then boom, we bounced 1, 2, 3, 4, 5, 6, 7 up days. Now this isn't a trend, because a trend is where you get some up days, profit taking, up day, profit taking, uptrend. That means it's not an absence of sellers, it's not an absence of buyers. There is an orderly action in the market, because what happens is when the market rises a bit, some people tend to take profits, and then as they take the profits, the new people come in because they think this is a longer term trend. So anyway, that's the Standard & Poor's, and what we've got to do now is see if the market breaks above that high there. That high is 2016. If it breaks above that, and then we need to see a correction for a bottom to be in place, then we can move after it. The Dow Jones 30 is already breaking through here to the upside. This chart looks a bit better, because although that breakout there appeared to be false and we went back to test, we didn't test this low. We've tested higher. So that's positive. And now we're inching higher than that previous top there. So that's positive, very positive news. So what we need to see again is some profit taking and then some upward action. And the other interesting thing is this moving average here, which was signaling the downward trend, is turned over and is pointing upwards. So if this pulls back to that moving average and then turns up, I would say all lights are green. We should be piling in. This is the Nasdaq. This is the fall off the cliff in August, and then bump, rebound, and then action, and then we broke out significantly to the upside, which looked great. But then we've gone back. But again, this buying in level is much higher than that one, so that's positive. This isn't anywhere near breaking that high yet, but the moving average is here, and we're slightly above it. So, on balance, it's positive. But we've also got this overhead resistance here. So we need to see more price action in this. Now, in my analysis this morning, I've come up with some very interesting things in my special situations service, which is undervalued, beaten up areas, extreme value where stocks are selling for the cash in the bank, sometimes below. Some are selling for half their book value. So I will be putting out another video, but it'll be focusing on those areas that are beaten up, and they're up a lot in the last 7 to 10 days. And when I say a lot, I'm talking 20, 30 to 100%, but they're still down 90-odd% because they were so beaten up. Now, let's move out a bit further here. I want to show you the Russell 2000, which is a smaller size companies. It's normally the more nimble, more dynamic part of the market, because this is where all the deterioration in the index came. This is definitely a downtrend here. We broke support here, and then we fell off the cliff. And then we've been getting positive action here, higher highs, this is all higher lows. We broke out. This has added to my conviction when we went back 100% in the market. But this is really unusual. We then fell off another cliff below that low. This was really, really negative. Maybe the powers that be in the US signal some action to start buying the market. It is rumored that sometimes certain people will come into the market to support it, to avoid the unthinkable happening, which would be a major decline in the markets. So we've had this significant rise, but we're at this downtrend level again. So we need to see more action. And then again, when I look through the market at what was darlings before, Facebook still having difficulties getting anywhere. The darling Apple, which many of the biggest fund managers in the world, Ray Dalio and people like that who manage billions and billions, they're heavily into this stock. But you see, it's got a lower low here. This is a negative. It bounced from the August sell-off, looked quite positive, but right now still it looks more of a negative trend. Avigo, which has also been a darling in the past, has been finding it for about a year difficult to get anywhere, and that's not looking that positive, looking in a downtrend. So that's not great. Skechers, which has been really good to us in the past, looks more in a downtrend than an uptrend, but that can reverse. Starbucks, so I love this company, but yeah, that's got a stop loss point here. Could be bought, but we just had our fingers burnt. And again, people have to realize how difficult the market has been in the last few months. I mean, really difficult, but this will pass. And I want to point this out because this is in August. The stock was 58 here, and it fell to 42. That is huge. So right now, what I'm saying is there are signs of things like the oil and gas sector breaking out here. So look out for the special situations update. I'm still on hold at the moment, but next week I feel even more confident that we'll be getting those signals of what to do in the market and whether we should be buying in right now or waiting a bit longer. But I know I'm adding this weekend to my undervalued superior earning stocks, and if they've got 20 to 30% earnings growth, when we're back online, that's the kind of money they'll be making. So on the 9th, which is my favorite number of October, which is my birthday month, have a great weekend ahead, and I'm looking forward to getting back to profitable ways. Bye-bye. Hello, this is Graham Bibby on the 9th of October 2015. Those of you who got my market roundup earlier, this is a special situations. I'm so excited about this service. As you know, I launched this a few months ago, and initially I let 9 founding members come in, and then I opened it up to another 9 members, so we have 18, and now I'm opening it up to another 18 members. I'm not sure how long we will allow individual account holders, because I am being asked to set up a fund to do this, because this is where the serious money is made. This is areas where the stock prices have been beaten up. In some instances, the stock price is below the cash in the bank. Other prices, they're half the net value of the company. And then you have our sexy themes, which are themes that are the investment thing of the moment. So in the past, that would have been Apple. More recently, it would have been Tesla. It could have been GoPro. It could have been Facebook. It could have been Twitter. So I just want to talk you through a few things. This is Valco Energy. It's in the oil and gas industry. And you see here, in July, hindsight's a wonderful thing. It seemed to be bottoming out just above $1. Now it's $2.29, 129% gain, 2.5 months, but not without volatility. The problem is here, it was all a crossing or below this moving average. Moving average normally points the longer term direction. And if it's like this and then it breaks below it, it says the direction has changed. And as you see here, then you have big swings where it stays below, stays below, stays below. Then it's trying to get above, that's slightly below, and now it's way above. And these lows are higher, these tops are higher. So it's 229. It might be up 129%, but the stop was 10. So it's still down over 75% from that high. So it could easily go from 229 to 450. It would be here. It'd still be over 50% down. So the upside in these stocks is huge. Let me take you across to the next one. This is Latin America, because Latin America has been beaten up. This is a leveraged version of Latin America, but the stock price is currently, or the ETF price is currently 19, and it was 140. So it's down, 85%. However, this number here, 31.39%, shows me that it's up 31% in the last 5 days. Now, let's get over to natural gas. You can't even see that this stock is moved at all. In fact, this is a natural gas ETF 3 times leverage. Doesn't even look like it's moved. And if I show you the extent of where we've been, this was 3,000, and today it's 36. So to get back to 3,000, it's got to go up something like 80 times, maybe more than that. Maybe it's 90 times, 80 times probably. It was somewhere around there. Huge upside for this, and if we zoom, then you can see the extent of the move, because it was below 18 just at the beginning of the month, and it's 36.7. And if we look up here, it's up 111% in 9 days of the month. 111%. Whoa! But we've only just moved above this falling average. This is really exciting. Sometimes you get these false moves like this, but you can move in and move out, add further decline. Then it looks here like, you see, this is going sideways and bottoming out, and it's moving up. Brazil have been hammered by the same thing. That seems to be breaking out of here. We've got to get above that moving average. That's looking interesting. This is EGY. We had it. It declined too much below here. We sold it, and after we sold it, what's it done? It's gone back up. That's really annoying. It's up 27% the last 5 days. Freeport-McMoRan we had. It was breaking out, and then it declined all the way, so we had to sell it, and now it's in an uptrend, higher than the previous recent high. So annoying, still frustrating, but that's the name of the game. It will do all it can to mess with you and mess with your brain, mess with your mind. In this instance, it's messing with my brain and my mind. So if we want to see where this thing has been, we can go back a wee bit further. And here, it was nearly 60, and currently it's 13. It's 13 from 60, but it got down here at one stage to 5 from 60, down over 90%. That looks interesting. The oil chart looks interesting. It's broken above moving average. The uranium, which we've been in and out of, is now broken above that average. That's looking positive. That's the actual ETF. And this is uranium resources, which is currently 80 cents. Let's see where that was. Let's see what the upside potential is on that one. Well, if we go way back, it was 100. It's 80 cents. So 10 times would be $8. 100 times would be $80. So 100 times, and you still wouldn't be back to the previous high. If we got back to the high here in 2010, that's 40 times. So huge potential upside. And these things happen when you least expect it. When you say, oh, well, it can't do that. Well, it can. It couldn't do this either, fall that much, but it did. Here's the Commodity Research Bureau Index. It's broken out above that moving average as well. So that's looking interesting. Quick Logic is one of the stocks. We've got semiconductors, not wonderful at the moment, but trying to move higher. Rig we were in, we came out of because we had this decline below that bottom there, really annoying. We've gone up. If we get a base here, it's now firmly again above that moving average. And there's huge upside here because
the stock is 16, and if we go back far enough, you can see where it was. It was over, well, it was around 140, so it's down about 88% from that high. So that looks like it could go up 10 times. And that's where you make the serious money. But we have a spread of these stocks, and normally they're all working independently. Now, Nam Thai property is still in an uptrend. This is where you can buy property for a 99% discount because they're next to the a big tranche of land that they own next to the new financial district that's going to be built in Shenzhen, which is going to be a powerhouse of a money center. And their land's going to be worth a fortune. It's in the books at basically zero. So there's huge upside potential in this stock. And you can see here it's called Nam Thai Property, but it's in the electronics sector because it used to be an electronics company. So it's misvalued and everything. That is a huge potential. And last but not least is Nugget. NUGT, it's an ETF. Here we are, 39.80. This is up in the last 5 days, 47%. It's broken above this. It could, if it starts up from here, that's the bottom in place. That looks a good bet. It's 40, and let me show you where it used to be. Up. Here, it was 2,000. It's 40. So 10 times takes us to 400. And 5 times 400 is 2,000. So it could go up 50 times to get back to its previous high. But we don't know if it's going to do that or not. 50 times is a huge amount. But even if it went to 75 here, from where it is, it's virtually, well, 17, say it went to 80, it's 100% from where it is. If it was 80 and it used to be 2,000, it'd still be down 80%. So anybody interested in joining the special situations or finding more out about it, please email me at ceo@richmondth.com or Brenda, PACEO, at richmondth.com. Put your questions, and then if you want to get some more details, or if you can put your telephone number or your Skype number, and a couple of suitable times to call you, we can have a chat over the phone. It's not for all your money, this, but it could be for 20% of your money. There's no minimum requirement on this. Once you join this, there's $3,000 to join. Once you join this, we're talking about performance. And the performances we're talking about, there's nothing in this list that I don't believe can go up 100, 200, 500, 10 times. So Graham Bibby, so excited about this service on the 9th of December, saying bye-bye for now. And I look forward to hearing from you.